All right, today we're going to do something a little different. We're going to look at financial charts in a whole new way. Forget seeing just a bunch of lines and numbers. We're going to learn how to read the hidden story that the market is trying to tell us.
You know that feeling, right? You pull up a chart and you're just staring at this chaotic jumble of ups and downs. It can feel completely overwhelming, like you're just looking at a bunch of random, unpredictable noise. But what if it's not random at all?
Well, here's the big idea we're going to dive into. What if the market is constantly, and I mean constantly, telling a story about a battle, a conflict between buyers and sellers fighting for control? Our job isn't to guess or spot random patterns. It's to actually learn the language of that story so we can understand what's really going on.
So where do we even begin? Well, honestly, we start by unlearning a few things. A lot of the most common tools traders use, patterns, indicators, they don't just fail to help. A lot of the time, they actually get in the way. They muddy the waters and hide the real plot.
Okay, let's take a big one, support and resistance. The idea seems simple enough. You see a price level where the market bounced a couple of times, so you draw a line across your screen and you assume it's going to happen again. But here's the problem, and it's a big one. That line is totally arbitrary. It's imaginary. It doesn't tell you why the market turned around there.
And this quote right here, it absolutely nails it. That line you drew, it doesn't exist. It's not a real barrier that stops the market. It's just something that you've put on your chart. It gives you a random data point, sure, but it gives you zero context for the bigger story.
And it's the exact same problem with trend lines and most indicators. They're all lagging. They're basically just showing you a summary of what's already happened. It's kind of like trying to drive a car by only looking in the rearview mirror. Yeah, it tells you where you've been, but it's not going to help you see the sharp turn coming up ahead. Okay, so if we're going to throw out all those old tools, what do we replace them with? Well, we go right back to the beginning, to the most fundamental building block on the entire chart, the individual candlestick. This is where we start learning the market's language, literally one word at a time.
Now, each and every one of these candles is so much more than just a price bar. The absolute best way to think about a candlestick is as a miniature story. It's a story of a battle, a tug of war between the buyers and the sellers. And the final shape of that candle tells you who was winning that fight.
And when you break it down, it's so simple, but it holds so much information. The solid part, that's the body. That tells you who won the territory, a confirmed victory. But the thin lines, the wicks, they might be even more important. They show you the price levels that were fought over but were ultimately rejected. This is where the real drama happened.
Okay, so let's actually tell the story of a single candle. Imagine you see one that looks like this, with a really long wick on the bottom. The story starts with the sellers coming in aggressive, right? They are trying to push the price way, way down, showing a ton of force. But then, plot twist. Before that candle could close, the buyers stormed in with incredible force. They shoved the market all the way back up, completely rejecting those lower prices. So even if that candle closed red, the real story, the one that long wick is screaming at us, is that the buyers are fighting back and taking control. Now that is a massive clue.
So, reading one candle is like learning a single word. It's powerful for sure, but to understand the whole book, the chapters, the plot twists, we need a new toolkit. We need a set of concepts that are based on logic, not just shapes, to help us build out the entire narrative.
And here it is. This is our new toolkit. Instead of drawing imaginary lines, we focus on these 5 core concepts. We've got market structure, that's our overall plot, supply and demand, that's where the big battles are going to happen, market efficiency, that shows us where the story might double back. Then you have momentum, which tells you how strong the characters are, and liquidity, which shows you where the fuel for the next big move is hiding. It's all based on the actual logic of how a market works. So let's see how this all fits together. Market structure sets up the main plot, right? Is this a bullish story or a bearish one? Supply and demand zones, those are our key scenes, the locations where we expect a major conflict to break out. And market efficiency, that's like foreshadowing. It points out gaps in the narrative where price is likely to return. When you put these all together, you're not just spotting patterns anymore, you're reading the context.
And this, right here, is the most critical part of all of this. What we're really talking about is a fundamental mindset shift. We have to move away from being a simple pattern spotter and become a narrative builder.
I mean, just look at the difference here. The old way of thinking is just based on hope. Oh, I see a triangle, so I guess I'll sell and hope for the best. The new mindset, the narrative-driven one, is all about understanding the why. It's saying, okay, I see clear evidence here that sellers are losing their grip, that buyers are stepping in with force, and therefore the market is likely to reverse. You're moving from a game of chance to a game of logic, from hoping to understanding.
So the next time you pull up a chart, I want you to try this. Don't go hunting for patterns. Instead, just ask yourself one simple question. Look at the candles, look at the battle that's unfolding, and piece together the plot. What story is your chart telling you? Because the market is always talking, and now you have a way to start listening.